Okay, good morning everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here. Good to be with you this morning. Just getting the release, guys, of retail sales figures out of the United States. Advanced print for the month of June coming in weaker than expected across the board. You're seeing the dollar get hit even more so. We are weaker across the board, save the CAD for the dollar this morning, and we are seeing these weaker than expected figures across the retail sales spectrum hitting the dollar even worse here. Coming off of resistance, we talked about this region yesterday, guys, the underbelly of that 12,008 level, which represented the 100% extension from the advance off the monthly low, last month's low, that is June. Continuing to cap the advance here and charging a nice reversal off of that high. So again, those figures real lackluster across the board. On the back of the minutes from last week, where we saw some concerns that weaker growth in the first half of the year might specifically, the Fed specifically said it might hit domestic sales. So here we are with the retail sales figures really manifesting that concern that we saw from the Fed last week. So could see the dollar continue to be on the defensive here. Again, the weaker greenback against all its major counterparts save the CAD, and we'll take a look at that. But the British pound, nice rally today, up 0.63%. Aussie up 0.57. We'll definitely be looking at the Japanese yen. That was really the only scalp that I've been focused on over the last 24 hours, guys. It's really been the cleanest setup. And we'll take a look at that in a moment. Mark, Eileen, GS, great to see you guys. I love the enthusiasm, Mark. Great to see you in the room. All right, so let's jump right into the thick of it. As always, I want to leave it open. If you guys have any questions or trade setup specific pairs that you're looking at, feel free to throw them out. But first thing is first. I do want to apologize beforehand, guys. I have the most ridiculous case of hiccups, so if you hear any weird noises coming out of me, it's probably me with the hiccups. So anyway, back to the dollar index. So again, on the daily front, we'll see what today's close looks like. If it turns out to be well, it's too early to tell, but let me say a couple of things. First of all, some things that we noted yesterday that are panning out. Remember, we talked about that 60 level in momentum continues to hold. Here's the turn away from it yet again. Remember, coming from overbought, we did break sub 40, so we do want to see the 60 level hold here if we're to maintain that broader downside bias here for the greenback. And again, that pending trigger off the lows from May still in play here. If we do push below yesterday's low price, it would be an outside reversal off of key resistance, and that again would be a very telling sign that we may be putting in some sort of near-term high here for the index. The tell here, or the broader compelling signal, will be a downside break of this key region, 11,935, 11,924, alongside a break of that downside trigger, which would also necessitate a break sub 50 in momentum. So for me, that would be the broader turnaround story here for the greenback. Excuse me. Mark says, I can send you a picture of myself. That should scare you enough to get rid of the hiccups. Cheers, Mark. So the greenback, again, starting to pan out pretty nicely. Here's what it looks like on the 5-minute chart, or the 30-minute chart, excuse me. And the levels continue to pan out pretty well. So this is the same scalp setup that we've been looking at for the last couple of weeks here on the dollar index. Again, the underbelly of that formation confluence, we highlighted this region yesterday with that 100% extension off the low, continues to cap the highs here. And again, now we have a very nicely framed Monday, Tuesday opening range for the week, and further highlighting that key region we just highlighted on the daily chart. Now also the weekly opening range low. Okay, so adding validity to really looking for a break below that to validate the broader turn for the greenback. And one other thing, bear with me one moment. I just want to see what this looks like. I actually haven't checked this out yet. Could be in play. We'll keep that dashed for now. And we'll go ahead and remove this one, which played out really well last week. Okay, gave us some really nice pivots to start this week. It was the upside break that we saw, that we highlighted on the Sunday open, that gave us the upside bias here into this rally to 1208. At this point, I think this one defines price action a little bit better. And for now, we'll work with that one. Okay, so it highlights a couple of different levels. This is going to be your bearish invalidation right here. Again, that continues to highlight 12,008. You look for confluence regions down here, and on a longer term approach into that region, 11,880, 11,887, which was a huge key pivot region for the index over the last couple of months. Raj says, "Hi Mike, I am long euro dollar from 1.0050. I'm thinking targets at 113. What do you think?" So Raj, give me one moment. Let me just get through the dollar yen, and we'll definitely go over the euro dollar. I like the long side of the trade, Raj. I'm not necessarily thinking 113 yet, but we'll definitely take a look at it in just a moment. Okay, bear with me. So any questions on the index before we move off? Could get a little bit of a rebound here, but broadly looking lower below 12,000. Key support 11,924, 11,935, and again, that's going to be the breakout point. That gives you a little bit more of a conviction downside bias for the index. Looking at yesterday's intraday update, which specifically highlighted the dollar yen. So, our timing was impeccable. When I published this, that was actually pretty much the high tick on the dollar yen. So 123.71 into 123.76 was a pretty key region. For dollar yen. 123.71 was actually the July opening range high. Okay, 123.76 was the 618 retracement of the decline. So you had a lot there. Let's start off with the daily chart. Here's what dollar yen looks like on the daily. Okay, so the broader play here, as we start off the week, was this region of resistance, which we broke through. On that break, the risk was for a rally into this region, and this was the broader bearish invalidation, meaning if we break through 124.35, 124.13, you're looking at resumption of the broader uptrend for the entire trade, okay? And I don't think anyone's going to argue that this is not an uptrend. And that broader uptrend comes into focus with a break back above 24.35. So near term, the resistance that you were looking at on this stretch, again, was the simple July monthly high. And here's the July open. Here's the July high. Okay? And we just missed the tag of it by a couple of pips. Okay? Add to that a simple 618 retracement of this decline. I don't want to tack it on here because it's going to get pretty messy. But you get the point. Hey, Depeche, great to see you in the room, my man. So, near term, you're looking against that resistance region. We need to get below this same confluence region we broke through yesterday to validate the turnaround, but you're on the lookout for that move. Here's what the 30-minute looks like. Okay, and here's what we were looking at yesterday. So as we came into that region, 123.78, again, that's the 618 retracement off the high. You had the 23.71, which was the July. Here's the July open, the July high right there. Actually, I think we went for a perfect tag of it. What was the high overnight? Was 71, right on. So we went for a perfect tag of it. And on that rally, and we noted this yesterday in the piece, you were getting some momentum into the high, divergence into the highs. So price action, I mean, even if you count this, I tend not to like divergences, guys, that are made on, what's the word I want to use, across weeks. So I tend not to like divergence that's like on a reference point that's using a Friday, Monday. So for example, this reference point and this reference point, yes, that is divergence because price action is making a higher high. The oscillator is making a lower high, but again, the gaps will tend to skew the momentum divergent, the momentum signature. So I tend not to stress those, but irrespective, you still had some divergence. Okay, price action higher high, the oscillator lower high, and I've told you this before. The oscillator, when the reference point, one of the reference points is above the extreme and the other reference point for the divergence is below, those typically will be pretty strong signals. So you had some divergence. That in and of itself is not the signal, okay? But it's telling you near term, this thing is at risk and momentum looks like it could be turning over. So bring it into a 5-minute chart, okay? And here's what the signal looked like. So as you were coming into that high, you had the divergence on the daily chart. You had that 71.78 region of resistance that you're looking at, the 786 in the monthly open. And you're looking for short triggers, okay? Here's the operative trigger that I would have been working with. That gave out with the move here as you were breaking back below 123.62. 78 is your stop. You're looking for about 27 pips. And the short would have panned out way more than 27 pips. You would have grabbed 2 of those ATR objectives there, okay? It looks like it's breaking lower now. Yeah, there's nothing here as far as a new scalp to be taken, guys, if you're not already holding the shorts. If you are holding the shorts, your next primary objective would be the gap, or the close, rather, from last Sunday. That basically takes you to 22.77. More importantly, that same slope resistance that we broke through on Monday, right around here, would be your secondary target to the downside. Okay, and in a scenario like this, where you've confirmed some sort of near-term high in price, it also would do you well to tack on a quick retracement. Okay, and if we draw that properly, I won't stress that 236. It's too early to talk about 786s. And that looks good. And again, we'll keep this at a light shade right now because we don't really know that we're going to be using this for too much of an operative play yet. And those are the levels, again, they highlight the key levels that we've been looking at. So again, this actually represents 122, the nice pivot in price. I think it was, the March high. Thought I had that labeled. And the 50% retracement of the advanced, nice pivot in price. That's basically 122 into 122.06. They have a nice region there of near-term support, and then we'll slide that down into that 38 too. But to get back to the 5-minute chart real quick, the thought process. One thing I just wanted to note for you real quick, this was the operative trigger that we would have looked to use. And again, even on the 5-minute chart, guys, remember, equal highs in momentum with higher highs in price action is still divergence. You're looking for the oscillator to not confirm, okay, an extreme in price. A new extreme in price, not confirmed in the oscillator. Okay. One thing I also wanted to note, guys, which is a trick I used over the years, which sometimes can be helpful, is when you're looking for triggers that are closer up. So I know we're coming into resistance. I want a near-term trigger, and I'm kind of looking for something that'll put me in the trade quicker. Sometimes if you take a trigger support just off of the session lows in momentum, can sometimes be helpful. So if you look at the start of the Tokyo session here in blue, the start of the Tokyo session, if you take a trendline support from the start of that session, the low in momentum had a 3-point trigger, and that trigger gave out just earlier from the operative trigger that we were looking at, and would have put you into the trade at a little bit better of a risk to reward trigger than the other one. So there's a couple of different tricks here you can use to get you into the trade a little bit earlier with a better risk to reward ratio, but long story short, the triggers were very readily identifiable here in the dollar yen. And again, short side still is favored here to the downside, specifically on the break of this trendline support. We'll continue to look for a move into that slope support, former resistance near term. Any questions on the dollar yen setup? Still looking to sell rally, still looking for support trigger breaks while below 123.70. Keep in mind that you do have the BOJ, okay, on tap. Not really expecting much from that front, but could charge some volatility. As far as the dollar is concerned, you still have some dollar data coming out into the end of the week as well. Specifically, you'll be looking for those CPI numbers, guys, which is going to be the biggest print this week. As you head into the latter part of the week, you do get those numbers on inflation. Again, an important metric for the Fed. And specifically as it pertains to yields on the U.S. front, and those correlations with the dollar-yen could be a nice mover here for the pair as well. Okay. Tuttle with a question here says, good morning. First of all, good morning to you as well, my friend. Says, would you describe your lot size conviction for that dollar-yen trade versus a session range break plus a momentum trigger? Would you describe your lot size conviction for that dollar-yen trade versus the session range break plus the momentum trigger? I'm not sure what you mean versus. Tuttle. I'm not sure what you mean versus. I can tell you how I trade in general. I have X amount of lots. Let's just say it doesn't matter if you're working with a micro, mini, or standard. Guys, doesn't matter. I typically work X amount of lots on a standard scalp trade. So let's say it's a typical trade size of 5 lots, right? If it's a trade that has multiple factors and there's clear technical conviction behind it, that's a full allotted trade. Okay, it'll be the full 5 lots on the scalp. Let's say it's a trade that's counter trend. Or it's a trade where it's on event risk. On a trade like that, Tuttle, I'll trade maybe, 2 lots or 3 lots. I very rarely will go in on a 1-lot trade or a trade that doesn't have multiple positions where I can't scale out. But it's really based on the technical clarity of the position. I'm not sure what you mean by versus a session break, Tuttle. They're all taken on their own merits, right? It didn't break the session range for that trade. Oh, I see what you're saying. Right. Yeah, Tuttle, that's not going to have any effect on the size of the trade that I make. I hear what you're saying. The range break, the session, the opening range, Tuttle, is only another factor for the trade. For me, it's just like a trigger break, or it's just like a basic trendline resistance or support break. There's no difference. But when there is a session range break in addition to it, that adds further conviction to it, right? That being said, Tuttle, it's also early in the week, so you're just setting in the opening range for the week. So during that time period, I also tend not to stress so much the session opening ranges, right, Tuttle? Because you could make an opening range break to the European session to the upside, but it's Tuesday, right? So you're just setting the Monday-Tuesday opening range, and that might stretch into the Monday-Tuesday opening range high, then turn around. So even though the session range broke to the upside, it's not necessarily the directional bias I want to work with. Tuttle, does that make sense? I want to make sure I didn't confuse you on that. Tuttle says, this is very helpful. I will need to rewatch this later today. All right, cool. Let me know if I can add any more color to that, Tuttle. What made you choose dollar-yen as your trade instead of the euro-dollar? Very simple, technical clarity and positioning, Eileen. It's pure and simple. Specifically for me, I'll tell you right now, is the 123.70 region. You're coming into the opening range high, which objectively in and of itself tends to dictate bias for us. The opening range for the dollar-yen on a monthly basis for the last 2 months has been textbook. And again, don't take my word for it, man. My word means nothing. Look at price action, okay? Here's June. Let me go back to May. Here's May price action. You start off the month, you set a high, you test the lows, you test the highs, you fail to break the lows, you break through the highs, you close at the monthly high. June trade opens up. You test a low, you rally into a new high, you test the low, it holds, the low breaks, you close right near the monthly low, right? So the opening range for the last couple of months has been a clear indicator and a very well received strategy for the dollar-yen. So now here we go again. Here's the monthly open, you test a high, you make a new low right here on the 8th, and here you are testing the high again. If this holds, You're still within the monthly opening range. If this were to break and push through, you're looking at continuation. So right off the bat, there's a clear conviction in validation level, Eileen. We're favoring the downside either way, right? The dollar index, which we looked at earlier in the session, was at resistance. So right off the bat, you're looking at the dollar at resistance. You're looking at the dollar yen at resistance, right? And the broader bias for dollar yen, we've been trying to press the short side, right? So all those fit together, and then you had a compelling divergence into a trigger break on the short side. So, Eileen, it's all about the technical clarity of the trade on its own merits. That's it. Plain and simple. So for me, that's what drew the attention there on dollar yen. Eileen, I hope that answers your question. Tuttle says, or I got Tuttle, Raj says, that's a tough question. By Tuttle. Oh, you're asking about the lot sizes and how do you dictate that? I mean, it's a good question. Tuttle asked a great question. That's very important. Something that I think we definitely don't talk about here in the webinars often enough is being dynamic with your trade size. It's very important that you press the trades that you have more confidence, more conviction on, and at the same time, it's extremely important that you lighten up when maybe trading conditions are not in your best interest. Or maybe if the setup is not as clean, right? Or maybe if you have a lot of exposure out there. I commend Tuttle. It's a great question. So let's jump into the euro dollar, Raj. Let's do that. So if any other questions arise here on dollar yen, guys, we'll continue to track this one. Again, continuing to favor the downside here for that pair. Euro dollar on the daily looks like this. Where art thou, euro dollar? Right on. All right. So, Eileen, to answer your question on why, well, I already answered your question on dollar yen and why I looked there, but there was a reason I avoided the euro. And that reason was because if you read the post from Sunday, guys, technically 110.53, 110.60 was actually the bullish invalidation level. So for me, I need to get back above that to get on the constructive side, right? I certainly don't want to be on the bearish side of euro, at least not now, okay? Yesterday you had an opportunity to take a short on the euro, and that was with the break below our bullish invalidation level, which was 110.50. That break would have prompted a nice short exposure there, basically into 110. But, this is the reason I wasn't really too keen on trading the euro. I don't want to be short euro dollar, not with the dollar index at resistance. And the long bias got invalidated with that move. So what do I do here? Nothing, Eileen. The answer is you sit on the sidelines. So I am looking still to favor the long side here if we break back above that key pivot region. Remember, 110.64 is actually that stretch low that you made for the May opening range. 110.53 is the 618 retracement from the advance off the June lows. You also had the upper median line parallel for that formation, which was in that region over the last couple of days. Since then, it's moved to the downside here. And you also have the 100-day moving average, which has more or less not really been a factor in play here, but nonetheless is in that region. So here's what the 30-minute chart looks like for the euro. Here's a region that we highlighted yesterday is where we need to kind of break out to get back on the constructive side, and we're testing that region now. So the only play that we had that would have been sort of in function here or in view would have been this region here. If you remember during the webinar yesterday, we were testing that break, and I was warning, you know what, this thing could rally right through, and a break back above the median line would actually be a nice long region in U.S. trade yesterday. Well, that didn't happen. And in fact, the opening range for the U.S. broke to the downside. Okay? And there was a move here, sub 40, and that was the deepest pull in momentum that you saw for the week. So essentially the downside here, sub 110.50 was the only play that you had yesterday. We've completed a 100 or a 1618 extension off of the high. Again, I'll also bring your attention to a sliding parallel for the operative slope that we've been working with. So if you take this median line formation right here, a sliding parallel off the low that you made from the 22nd of June, caught some real nice pivots in price. and that was also in that region and continued to catch the lows here this week. Okay, so the rally here taking us into the upper median line parallel again, 110.65, 110.55, and that's really the region that we need to get through. If momentum clears 60 on this break and price pushes through this on a close basis, again, I think that gives us the conviction for the turnaround here in the euro. New pitchfork up, says Mark Haverman. Possibly. Let's check it out. Let's check it out. Could be in play here. I tend to wait, Mark, for price action to develop a little more so I can at least have one touch point of one of the median lines to validate it. Because as you know, obviously, until we get a reaction off of one of these touch points, guys, these 3 reference points don't really mean anything, right? We need to see price validate with a reaction off of one of those points, either rebound or a sheer breakthrough rally or something like that. So could be the play. He said it meant on the daily, but that works too. Yeah, we'll check out the daily in a moment too. But it's always a good idea to tack them on, even if you don't leave them on, just to get an idea of where we should be looking for relative resistance or resistance or support. But something like that. Or even something like that. Actually might be even better suited, as you can see that on a close basis caught that really well. And the daily chart's always stressing the close. So much action happens at the close price that's really what should be stressed at all times when you're looking at a longer term duration chart. So might not be the wrong slope, might be a good play here, Mark. So we'll keep that in view there on the euro. Either way, the immediate focus remains the same, right? Unchanged. And that's basically looking for a close or push through 110.65. And again, such a scenario, you'd basically be looking for a rally back into 111.15. On this type of scenario, again, your best, what would serve you best from a scalp standpoint would be a basic retracement. Now that we have some sort of conviction that a near-term low has been in play, a simple retracement highlights the lows that we made for that Sunday open gap, and that's 110.85, 110.90, excuse me. And the 618 again highlights that same region. So we can go ahead and get rid of all those other retracements, keep this chart nice and clean. Actually, we'll leave that 786 on. And actually, I'll get rid of that 618 too. All right, so those will be the levels we'll be working with for the session here on the euro dollar. By the way, anyone who's newer to the session here, I see some new names in here, guys. Feel free at any point during the webinars. There's a camera on the top right-hand corner of your GoToWebinar screen. At any point during the webinars, you can always click on that, take a freeze frame of any of the charts that you see presented here so you can reference them at your own leisure. Raj says, Mike, is 113 a good target? And Mark says, good confluence at 111.15. Yeah, I saw that 111.15, 111.20. I like that region. And also, right, the median line. You're absolutely right. You're absolutely right. So that's a former lower median line parallel off the lows here. This is the one that we were working with earlier. Could be in play. So definitely, I'll highlight that. Nice confluence region there. Absolutely. And even on the euro, Eileen, to answer your question, asking, was there a trigger here? There was actually a trigger here last night that panned out. It was actually more so in European trade, and that was right here. The trigger to the upside wasn't necessarily as readily identifiable, but here you had ongoing divergence into the lows, okay, into a trendline support, and then the trigger break. Now, it just so happens that by the time price cleared the highs here, you're way outside your stop limit, right? This is basically a 40 pip stop by the time the trigger gave out, and you're looking for 34 pips. So it wasn't there from a risk to reward ratio, but the signal and the triggers were certainly there to mark some sort of near-term low in price. So just this quick side note there for you, Eileen, on that euro trade. But to answer your question, Raj, on 113, man, obviously, my focus is near-term trading, so I'm not necessarily, targeting things that are 300 pips away per se. Yeah, again, I don't really have a concrete opinion on that, Raj. I personally don't ever target anything outside the monthly range because that's not my personal strategy. If you're taking that based on a swing type of approach or a longer duration trade, I don't want to give you any feedback that could dissuade you or give you conviction on that. That's unwarranted, okay? All I can tell you is that 112.36 is the 618 from the decline off the yearly high. That's a region that's just above the monthly high. And if you see that give out, I think 113 is actually a pretty conservative target. I think if we clear this region, I'm looking at like 113.90. The new median line that we just added, but more importantly, the median line that we've been in operation off of the yearly low, both of those coincide with that 88.6 retracement from the decline off the yearly high, and that's right around up here. So it really depends what you're trying to do with that trade. I don't know where your entry is or how much of a stop you're willing to hold on that, Raj, but for me, it's one level at a time. I look at the next immediate, maybe next two immediate resistance targets, and that's it. So first things first, a break above here. You look for 111, 111.40. 112.36 is going to be a major key level I'll be looking at. The swing highs from last month, the 618, and again, a break above that, I'll be looking way up here. Does that make sense? Raj says that makes sense, Mike. Thanks. You're more than welcome in. And again, I don't want to dissuade you, Raj. You can always ask any questions you want here, but I'm always going to be frank, with at least my outlook on it. So hope that helps. So that is the euro dollar. I think we've covered both of these pretty thorough here, guys. So still both our favored scalps here. Okay, we'll continue to eye both of these, and these will probably be where most of our plays in. The other setups that we've been following broadly are, I just want to go over really quick the Aussie Kiwi. That's seen a rebound off of that channel support, basic trendline support that we noted yesterday in the webinar. Again, if you recall, this was a setup that we highlighted last week. Basic trendline support off the May low, did catch this on the pullback here. Okay, and we're basically looking to see that play that rebound. Now, we're looking for shorts on this move. Again, here is what the scalp setup looks like. Remember, we talked about this yesterday, basically setting up a very nice weekly opening range. That broke to the top side. So, in fact, on this play, there was a long that would have been, well suited in this position, looking to target that 111.36 region. But remember, this, I don't remember where my marks went, this region here is the near-term bearish invalidation level, okay? And I just want to bring up these major key slopes, and I want to keep talking about the same thing every day, guys, but this is still what's in focus, okay? And as long as we stay below that slope, the focus is for a possible still drop even lower into that 109 barrier or so. So as we get closer to that slope, we'll be looking for resistance. We'll be looking for short triggers up here near 111.30, 111.40, and we'll be on the lookout for short triggers as we head up into that region. Okay, here again, you might have just missed it actually. Looks like we just missed it. Nice short trigger here. Again, higher high, higher high, higher high. Equal highs followed by a lower high. That's some pretty compelling divergence into a trigger break. We'll see if we can make it back below that opening range low for the week, or opening range high rather for the week. But still think the risk is for a stab back into this slope line before we turn over. A little bit tighter of a range, only about 26 pips, a quarter of the daily ATR, but the levels are pretty. The market has been respecting our levels pretty nicely here. Yeah, for some reason, I see Aussie strength everywhere, says Mark Haberman. I don't think it's that surprising, Mark. I mean, look at this trade, man. It's been pretty heavy. It's been pretty heavy. And the expectations for further rate cuts from the RBA, I think a little bit overdone at this point. So if we take a quick look at the global summary for the Credit Suisse on overnight swaps, here's what it looks like. Again, this is Credit Suisse's gauge of what market participants are factoring in from interest rate expectations over the near-term time horizon. So this is telling you for the next interest rate decision, there's about a 35% chance for a 25 basis point cut from the RBA. Okay? The RBNZ still factoring in a 92% chance that the RBNZ is going to cut 25 basis points again next month. All right. If we look at 12-month expectations, there's still about 18 basis points expected in further cuts from the RBA, and about 53 basis points in additional cuts expected from the RBNZ. So again, I think this is a little bit overdone here. This has come off dramatically. The RBA was expected to cut even more than 18 basis points. This has dropped in recent days. So not too surprised, I want to say, that you see a little bit of a snapback here, Mark. The Aussie has been, beat up pretty aggressively. Not only that, if you take Aussie as kind of just a basis for, broader market risk appetite, let's say, you've seen that pretty significant or pretty marked snapback in risk, right? And Aussie hasn't really participated. So here's the SPX. You see the SPX came off a major support confluence last week. And we highlighted this region between 2037 and 2041. This is a 618 extension off the high. This is a 618 retracement of the 2015 range. Okay? And certainly you had the lower median line parallel there and a false break of a longer dated median line off the lows from August of last year. So, quite a 2-3 day rally that we had here. Now we're at near-term resistance, 50-day moving average right up top there as well, 55-day moving average, right at about 2100, and that's near-term resistance. So Aussie, could see a little bit of a snapback here. Shouldn't be too surprised. Mark says that explains a lot. Yeah, Mark, I hope that helps. Just to give a little bit of a reference there. So for Aussie Key, the focus again could get a little bit more of a snap higher here, but broadly looking to stay bearish below that near-term resistance. Depeche says, "Hey Michael, how do you define and mark out an operable RSI line? RSIs are moving all the time, so do you draw the line, for example? How do you, I think you missed a word there, the latest low is or is not the support level? Also, which should the EB for the trigger for that trade execute? A longer term RSI break or short-term break?" Okay, Depeche. Let me take this on a multiple approach here. Again, I'm sure other people in the room have a question. So let me take a step back. I'm not sure what the first part of your question is asking. How do you know if it's operable, or how do you know what the lows are? You look at RSI just as you do price, Depeche. So you're looking for basic trendline support and resistance. That's it. I don't know that this is going to be a major low. I don't know that this reference point is a low. I don't know that this reference point is low. But you know what? They're all on one single plane. There is one slope that defines this move. So if they all connect on the same slope, this is a trigger. Okay. Now, if this is an operable trigger, it's only operable if price breaks a support level in confluence with this. Okay, so on this move, why this probably wouldn't have been a compelling trigger break, despite the fact that you had divergence into a trigger break, is because price didn't really break a support, right? If this move here had been accompanied, Depeche, with a break below this support, then it would have been an operable trigger. Does that make sense? Remember, price is everything, guys. We're only looking for this to be a reference, okay? A trigger in and of itself means nothing. I'm only looking to see that this trigger confirms what I'm seeing in price. That's it, not the other way around. Depeche says, perfect explanation. Thanks, my man. Right on, man. Okay, cool. Let me know if you need any background color on that. But that's sort of, I think, I kind of got the gist from your question that's the one thing that you were missing there. So I hope that offers some clarity there. Also, as far as one other thing I wanted to note with your question, as far as the longer term or the near term charts, so the 5-minute, right, these triggers are what actually prompt us to click, buy, or sell. Okay? These triggers on the 5-minute are more so for reference for bias, more so necessarily for me to actually press the trade. Not only that, Depeche, but let's say I take the trade on the 5-minute. Okay, let's say I take the trade on the 5-minute chart. I'm going to want to see a trigger break on a 30-minute subsequent to that to confirm that position. So let's say, let me use this as an example. Let me use this as an example last night. So let's say we took this short here on the dollar yen off of that high. There wasn't necessarily a trigger here, right, on the 30-minute. So you know what? The trigger was on the 5. You take the trade, okay? You take the trade here. You're waiting to see what happens on the 5-minute and on the 30-minute. And once the 30-minute breaks below the 30, for me, cool. Now I know. A little bit more conviction on the trade. I'm cool. Sit back, relax, let the trade pan out. The 30-minute trigger just gave out as well. But I'm already in, right? Because the trigger gave out in the 5-minute. We were at resistance, and for all the reasons that we talked about earlier in the session. So I hope that adds a little bit more color to your question there. Depeche says, perfect. Right on, man. Aurelian says, CAD made a false break intraday of 127.80 and faded. If it were to close above that, would you go long, CAD, on a pullback off the close above 127.80? Yeah, Aurelian, I would. If it closes above 127.80, I would look to buy pullbacks in dollar CAD. So here's dollar CAD, 127.80, 127.70 is a big region of resistance for me. We talked about this briefly yesterday. You're looking at that trendline resistance. I think I can't move it on one swift motion here, but it goes all the way back to the 2002 highs. We looked at it yesterday. It matched the high, or triggered or capped the high that we made here in March. That trendline resistance on a close basis is still being respected. Okay, we pulled through it a couple of different times, but we haven't closed above it yet. So that is still in focus. The 100% extension off the low gives you 127.70. The 1618 extension off of the near-term low gives you 127.80. Here's what it looks like on the 30-minute chart. Okay, and those are the levels that we're looking at as near-term resistance here on dollar CAD. I need to see a close above that to play the breakout or to continue favoring the long side. As long as I do, as long as you'll continue to hold below it, I still think it's at risk of turning over. Remember, guys, topping processes, these things, they don't happen in a swift spike into a high and reverse, right? These things sometimes can be in a drawn-out process. Sometimes it takes days, months, weeks as a topping process happens, or even a near-term high takes shape. So looking at this at the near term, you look at it, it still shows divergence on the intraday chart as price action pressed into new high. Again, I don't really like using this low because it's spanning multiple weeks here. That trigger break in momentum didn't give you a break of any support level in price. So again, Depeche, an example of a trigger break that is not operable because there is no break in price. But broadly still looking for this thing to turn over. Still looking for this thing to turn over. Um, what can we say about dollar CAD? If this high does hold, let's just add some color to this near term and see if we can come up with a game plan here. Looks pretty clean to me. That spike low, right on that. That spike high, right on that. A little bit of a messy move through here, but broadly speaking, seems to define the slope rather well. On the pullback here, that slope catching the lows there as well, right? Under 127.06 would confirm for me dollar CAD, says Mark. 127 what? 06. What does 127.06 mean to you, Mark? What does that level signify? Okay, bear with me, guys. This might look a little messy in your hand, in your term. I just want to check out some stuff. He says 4/1/2015. Oh, is that the high or something? Okay, so this is what I'll say on the dollar CAD here near term. On the daily, first of all, so a couple of different things. I want to be caught. I just want to give a word of caution. Even from a scalping standpoint, this is one of those trades, guys, where you want to be very cautious. And any short term or any shorts, let me just say it bluntly, that you take on the trade here, you really want to be trading half trade a lottage on this one. Why? Because essentially what we're trying to do is call a high. It's never something that's advisable. It's nothing that you want to do on a normal basis because it's always a recipe for disaster, even if it's at resistance. And these are the ones where it's at resistance, so you want to test it on the shorts with relative light. Dip your toes in the water, lighter positions. Once you get the conviction, once you get the validation of some near-term turn, okay, or if a near-term high's been put in, then you start pressing in on the shorts, right? But near term, what I want to say is this: ever since we broke 60 to the upside, you found support at 60. Support at 60. This is a constructive momentum signature. That's my problem with the trade. As much as this is trendline resistance multi-year, you got 100% extension, you got, a lot to suggest that from a price standpoint, you're coming in some critical levels. Momentum still looks pretty healthy. So I just want to point that out. Intraday, or on the 30-minute chart, yes, I do want to look lower below 127.70, 127.80. So, we'll be looking for short triggers while below 127.70, 127.80. We'll want to see a break below that, and possibly a break below 60, or a break below 40, in momentum, to validate the turnaround. Remember, the weekly open $26.53, so right here. It literally rallied right off the open, and we never looked back. The next area of confluence beyond that would be down here if we break the weekly opening range. So first area of support, 127.10 into the 127 handle. Basically, you're looking at that median line, the swing low we just made, basically. So here's the game plan. Mike, you've highlighted some nice levels here, but how do we play this moving into the U.S. session? This is what I would say, guys, looking into trade moving forward. I'd be looking for a rally back into this region and looking for short triggers in momentum if you get them below 127.80, 127.70. From the standpoint of support, this is the level that, again, if your break would, in my mind at least, give us a validation for a near-term short bias. This is the break that would suggest full-on continuation or at least reversal of the medium-term trend of the rally that we saw off last month's low. Okay, remember, a downside break of a descending channel, sometimes, or most of the time in my experience, those have been the sharpest moves. A topside break of an ascending channel, most of the time, these will be the sharpest moves. Okay, so keep that in mind. Generally speaking, when you see these trends pan out, a lot of times if you're in an ascending channel or a descending channel, you just look for channel support or channel resistance. But in fact, when those break, those will be the sharpest moves of the trend most of the time. So keep that in mind. So Aurelian, does that answer your question? Permendra, I know you're looking at dollar CAD too. On the dollar CAD. Under 127.06, I got that one. I'm finding CAD hard to scalp because price ranges by an amount equal to the ATR. So Jay Jackson, one thing I want to say, man, is by the way, Jay, I'm not sure if you're the one who sent the email earlier. We don't have a pause on the subscription, so even if you're going on vacation for any reason, Jay, you can always just cancel it and then resubscribe. There's no problem on that front. But I don't have we don't have an option for vacation or anything like that, so I just thought I'd answer that here quickly. But Jay, what I want to say is this: the ATR, guys, as a profit target, again, it needs to be taken as a tool, man. We don't want to be super stringent, super strict with any one aspect of the strategy. Okay, trading doesn't happen in a vacuum. So I hear exactly what you're saying. The ATR 26 pips is almost exactly what we're seeing on the range, right? So if that's the case, Depeche, one of two things, man. Bring in your profit targets a little bit, and as such, obviously you need to bring in that stop accordingly. Or you know what? Sit on the sidelines, man, and let's check out another scalp until we clear this range. I agree with you, Jay. This hasn't been the easiest pair to trade, which is why personally I haven't taken any positions on dollar CAD since last week. Remember, this was actually the last trade we took last week on dollar CAD, was the short into this position. And then we got stopped out for the last quarter of the trade on the way up. I haven't touched this since. And again, you know my game plan. Still looking lower below 2780. If 2780, by the way, just as a contingency plan, we need to have both sides of the markets mapped out. If 2780 gives out as resistance, this thing could rocket. The first level of resistance, or the first target, a soft target, would be basically the stretch highs that we made for the year at 2833. You also have a former upper median line parallel here, which has worked as a decent pivot. That comes in right at that region, and the current operative median line off the low just above that. But largely speaking, you're risking a rally right into 130, 130.60. Okay, so topside targets beyond 128.30 is a break above 128.33 rather has implications for a much more substantial rally here for dollar CAD. So just to put that out there, but that's what I'd be looking at. So Jay, I understand your frustration, but sometimes we just need to either reduce our reduce our expectations for the range, okay, or just sort of sit tight, let the range pan out before we start to take a stance on it. One other thing is, again, with the quarterly daily ATR, again, be dynamic with this. Sometimes if I have a really clean setup, guys, where the market is very, very clean between my levels, but the ATR is just too tight, sometimes I'll look at 33% of the daily ATR and open it up a little bit, right? Again, I don't want to encourage you guys to be too lax. We want to be disciplined, but we want to take things in perspective, right? And if the ATR is too close to what the daily range is doing, we want to adjust accordingly. Mike, can you check out sterling yen? It has just broke the RSI 40 on a 5-minute chart, says Raj. Depeche says, can we take a look at sterling yen? Please, sure can. Here's what sterling yen looks like on the daily chart. Checking resistance at the 50%. Nope, that is a stale level. Let's delete that. Monthly pivot. Haven't updated the daily chart, really? So it doesn't look like it broke 40 on the 5-minute chart, but I assume that when you said that, it looked like it was because the wick probably looked like it dipped right into the 40, right? Remember, guys, on the RSI signatures or any oscillator that you're looking at, only the close of the candle matters. So whatever this signature line is doing while that candle is open holds no relevance. It's only pegged to that position once that ATR, once that candle closes. Sorry about that. Um, as far as the dollar or the sterling yen is concerned, I actually haven't checked this out today yet. So give me a moment here, guys. That retracement is still good. Huh. Yeah, I don't really like the setup here. You gapped, okay? You filled the gap. You sat in the gap range for about a day, and then you broke the gap range to the upside. You tested the gap range as support, and you pushed higher again. Um, to me, that's constructive. That's constructive. Now you're seeing both constructive and bearish momentum play up at the same time. And what do I mean by that? Well, price action, as I just described, to me, that looks pretty constructive. Momentum doesn't look that constructive. In fact, on every high that you've made in price, momentum, the oscillator, has actually seen a lower high. And that suggests divergence. So this is what I'd be looking at. Actually, that looks like a trigger that's just given out as resistance. This is operable now, so let's go ahead and add that color a little bit more concrete. That's 618. Okay, let's get rid of these targets. Don't want to stress that anymore. This is your weekly opening range low. Yes, there's no really compelling median line structures that I'm able to pull out right here, kind of, right off the top of my head at least. Um, but this is what I'll say. You want to stay, or at least the invalidation level, in my humble opinion, near term would be this region right here. So you have the opening range high for, well, I don't want to say the opening range high, basically last week's close, okay, which was basically the gap range high, which broke. And again, if we use the gap range in and of itself as the opening range, we tested that as support and it held an overnight. So add the fact that the median line off the low is there as well. We've seen some nice reactions off that median line. We'll stay constructive above this region, and that's also going to serve as our near-term bullish invalidation level. So as long as we stay above this level, you want to be mindful of trying to take any short exposure. That median line structure that you just saw me delete was what I was working with, but it looks like we've broken that as resistance near term. I think Jamie was looking at a similar median line off the highs, and it was basically mimicking this on a shift. And it looks like we just broke that as support, or as resistance, and checking it as support. So look for resistance near 93.50 or so, and it's basically the highs that we made here. The uncovered gap would require a rally into close. What's the close? 94, 97. Okay, or thereabouts, would be needed to essentially fill the uncovered gap that we made in late June. So that's what I'd be looking at here near term for the sterling yen. That sterling dollar move from earlier messed up sterling yen strategy. LOL, Carney. Yeah, Mark. Listen, sterling is known as a professionally traded market, man. It's not for the faint of heart. So here's what sterling dollar looks like, by the way. We're over on time, guys, but just a quick look. I just wanted to highlight 56.29, 56.40, this region of resistance here. We were looking at this yesterday, and specifically, I was looking at this, which was the confluence region of that median line parallel off of the high, as well as a basic 38.2 of that same decline. And it was a little bit below the weekly opening range kind of stretch that we made yesterday. So in overnight trade, we kind of surged right through that. And here we are now testing a little bit more of a critical resistance range just above last week's high, and a nice pivot in price you can see here at that 56.30, 56.40 region. So look for that as resistance on the pound. And if we move through that, guys, you know, I think you look higher in the pound in general. A nice reversal here ahead of 40 in momentum. The momentum signature since the start of the year has turned constructive for the pound, guys. Longer term, if you look at the daily chart, things have changed. The behavior of the momentum signature has changed. Okay, you come from oversold, resistance ahead of 50, oversold, resistance at 60. Now you're not getting oversold. What? Now you're getting a 60 break. Now you're getting a turn ahead of 40. Look at that 60 break again and see if we can get a little bit more constructive here on the pound. Back above the median line off of the yearly lows. We need to get through this region. Okay, a little bit closer to 56.60 on this one. But largely speaking, looking for a break of some resistance here to get more constructive on the pound. Areas of resistance near term, 56.30, 56.40, and then again, this region here to clear the way for the May high day close, then takes into 57.73. All right. Some great questions here, guys. Sorry it took me so long on that sterling yen, but that's a very interesting setup there. I'll do some more work on that, and hopefully we'll have a little bit more of a clearer picture for you as we head into the webinar tomorrow. As always, thanks for everyone who attended here today. We'll pick things up tomorrow morning at 8:30 again for some more intraday setups. And again, tomorrow on Wednesday, we'll also have the midweek strategy webinar at 1 p.m. with Jamie. Till then, best of luck trading, guys. I'll have an update for you later tonight with the intraday SB update. Best of luck trading. See you guys tomorrow. Cheers.